I can't take no loss. I don't even know what it costs.
Hi, and welcome back to The Conscious Day Trader. My name is Yanis, and today we're going to break another pound USD trade. It's going to be a volatile week, and it has been a volatile week. This is a very fresh trade. It literally happened. I closed every position about a few minutes ago. I was very close to doing the video whilst one position was open, but it did finish. And luckily, because I want to make these videos before it gets dark. That's my aim. No videos with dark backgrounds. So if you're fresh here and new here, or if you're watching this video for the first time, I'm an ICT trader with experience of coming from the Scruffy trader, passing all my funded accounts with Scruffy Madness. If you're familiar with these terms, it's a Scruffy trader is another great trader you can find on YouTube. Some other courses that I wouldn't recommend that I did early stages in my career, but ICT and Scruffy trader are the two people that I can 100% tell you go and follow them, and you will be in good hands. And hopefully you can follow me now and be in safe hands as well, because I've been dedicating, I would say, 2.5 years to mastering my trading, and it's slowly coming together. We've had all green days. Before we talk about that, let's go on to MT5. And here we are on MT5. This is live. This was the drop that happened a few hours ago, and that's what we traded. We were short on the pound dollar, and we're going to see why. And as you can see, we've had a very good day. Half a grand in a couple of hours work. Not bad. And what we're gonna do is explain my entry. I've put my best entry on there, and my worst entry was actually a good entry as well. So they're both, I would call them best entries, and some repositioning that happened with this. For instance, $36 is just a repositioned that to 3225. It was something that I wanted to get out to get a better price. And that's a method I use. I call it repositioning, is because it works for me. Instead of letting trades run, I would rather kill them and get a better price. And there's a method that I do that works for me. And I know a lot of people want to know that method, but I am not ready to share all the details of that just because it works for me. So I don't want to take any responsibility if someone learns something that is from my experience and my psychology. I don't want to be in a position where you're like, hey, I tried your repositioning and I lost all my money. And that is really key. Anything that you hear on this channel is all for education, and it's all for fun. Don't take any trades based on what I'm analyzing on these charts. And that's a disclaimer that you would see on every single video in the beginning, and I'll make sure to keep iterating that through the videos, because all the risk that you're taking is yours. And do your due diligence, and do your studies, and do your own analysis to take your trades. Okay, that's being said, so this is the 502, and now we're going to jump on TradeSync to see our performance of the month. I am super happy with this month. We're still on target. Yes, it might be a bit tricky to hit that 10K month again, just because these two trades overrun. That actually is not a bad trade. So that's like 440. So this is about $300, $315 between these 2 days. So we're going to be possibly a bit short. We're going to have to be making $540 odd for the next 1, 2, 3, 4, 5 days. Who knows? We might hit it. I'm not going to chase any money. Whatever that amount is, I'm so happy. This is like way more than I used to make when I was back into my data analytics and working for Team GB. It was like not a lot of money when I'm thinking of all the hours that I would put in. And days like today, when I can make half a grand in a couple of hours and then do what I like make videos for you guys and go and live, watch the sunsets in Bali, it's a reality that you have to create, and you can do it. It's not fake. And I show my trades every single day. We haven't had a red day in, hopefully we're going to finish March without a red day. And that's going to complete 3 months with a 100% win rate on every single day. Trading ICT, trading with my experience that I've learned from the Scruffy trader and everything that we've gone through. And I know there's a lot of followers that are getting used to my trading now, and they can see the simplicity in my trading. And there's no magic pills, that is it. You break the trade like I'm going to show you today. I'm going to go in detail in terms of what we're looking at the chart, how it can create bias. Why bias is not everything. You can get bias wrong and still make money. And this month has shown you this. If you go back into this trade, 638, this trade, my bias wasn't the best, but it did pay. And that's key. When you're not on the right bias, make sure you're out when you're getting paid and not overstaying your welcome. When you're with the bias, you can let the runners run. And that's the key to making a successful and consistent trader. A lot of questions. One of the most common questions that I will always get: what's your risk reward? My risk is not having a red day. That's how I see my trading. And it might not, you're not used to that language, because everyone says you have to be risking 1 to 3, 1 to 4, whatever you're doing, 1 to 1. When I go into a trade, I know that I'm going to be profitable. And that is the most key thing. One, for your psychology, one, for managing your trade. You don't go into a trade fearing of losing that trade. If you're oversized and you need risk management to deal with that, then you just need to be less exposed with your lot size. You don't need a risk management tool to tell you that you're overstretched and you're overstretching your account on the size that it has. And I know some people will say, like, $2,000 on what the drawdown of this account is about 20K, you're risking about 2%. I'm not risking 2%. What I am risking is, I'm not seeing it as a risk. What I am doing is, this is the amount that I'm willing to give away from my profits on this month. And that's about 2,000 to 2,500 for my, and if we look at that, that's a little bit more than a week's worth of trading. And I would still be making, if this week goes well, and let's say we had a bad week, we'll still be making $7,000. That's amazing. That's so much more money than I've ever made in any other job. So risk reward, yes, it has a place for some people, but you have to use it don't use it as a rule-based, minimizing your evolution as a trader, because you don't want to be trading from fear. You want to be trading confidently. You want to be logic-based, and look at your strategy and look at your win rate, look at your performances, and base your risk, if you want to call it risk, base it on your performance. If, let's say, we take this one here. If you're making £20, let's say £200, and £200, 400, 600, and then you come here and you had a bad day, and you blew the account in terms of, like, you had a loss of 2,500, that's massive compared to your profits. And that's really key. You can't let the account have enormous amounts of loss, because it will take you months to recover. Here you can see I'm making about 2,300. Okay, we had only 2 days traded there, but if I have a whole week, we're looking at about $2,000 to $2,500, and that's what I base it on. You need to see what's realistic to your account, what can take. If you're on a funded account, if you're doing challenges, that's a different story, because you need to see what the drawdown is. On the 5%ers, for instance, you have a drawdown. Let's say you have a drawdown of 6,000. Obviously, you can't risk $2,000. That would give you 4 attempts to pass that challenge. Maybe we'll do a video on that in the future. But today we're going to break down today's trade, which is this one. 5 trades. Really happy with that. We're bringing those trades down. If you remember from the previous months, we had a lot more repositioning. Our entries have been a lot better, and we're going to break down that today. Let's jump on to one more, the fibers. Okay, this is the new platform. As you can see, we are funded, and we are close to 83% to the next milestone, which will be, I can't remember now, if it's 4th or 5th milestone of funded account. I tend to do it every month. Get a bigger account, which is brilliant. I think that's 5 to 6% on each month. We're trying to make 8,750, and then my 175,000 that was given to me, now it's, and the equity is at 190, is because obviously I've got all the profit in there. I don't take all the profit out because I want to have that ability to manage my account. We can see that P&L going up and up and up. And what we're targeting is to make sure not to make 8,750 before I withdraw money, because it takes 14 days to give me that money and an account back. 14 days of me not trading, that's a lot of money. So I need to make sure that I pull the money out and that I can get my money back before I actually reach the next milestone. So this is the account, and then you can see the total trades, 98 trades, our biggest gross profits of 10K. Obviously there's charges on that. We have the best profit 600, biggest loss 566. That was on a day where we made $1,000, so it played out. We had to reposition some trades. Largest pip count 61.56. So we're in a positive profit factor of 4, which is really good. Percentage win rate 70% with the repositions. If you remember last month, we were around 60, and that is getting a lot better. There we see average size is 0.98. I'm not sure why it does that. Maybe they get some profits from the lot. It's one lot that I trade. And there we go. That is everything you see on this. We obviously, this is the minimum that my account would be terminated if it hit 168,000. But the equity is at 190,000. So we've got quite a bit of, what's that? That is, so that is 22,000 that I would have to lose before they would take my account away. So that is a nice buffer that I'm building up, and every milestone I'm keeping money in, and that buffer is getting bigger and bigger and bigger. That's been said on that. So now we're going to jump onto the thing that you're here for, and it is my trade itself. As you can see, we've got the best entry there. I've repositioned that best entry as well, and we're going to break down. We have some really nice, I've just seen this. I was contemplating of letting it run, but whatever. We live and learn. I should have kept it. I mean, I knew it was in a good position. Let's see. From here, we need to take the magnet out. So we had from this entry that we got in down to here, would have been another 20 pips. So that would have been another $200. We would have made $600 instead of $500. So not a huge difference, but it adds up. As you can see, it's just come now below this, taking the liquidity up, and it's coming back up into this fair value gap. It's highly likely that this is going to continue after this area here on the downside to hit equilibrium, which is down here. If it doesn't do that, look at this area here. This is the sell side liquidity below this area, which will be targeted as a next target on this. Remember, we have news today. We have a Bank of England news, so there might be some volatility around 12 UK time. And this is quite interesting to see live. I can show you how this behaves. So you see now it's breaking the fair value, and now it's going to reject it and potentially push down. Now, if this doesn't happen, if we take this prediction ghost pattern, you see how it's doing it now. We're going to see by the end of the video if this works out. If this doesn't happen, the next target would be the highs above here. Where was our entry? And as you can see now already, if you were in this, you would potentially target this lows here, which is 8 pips. You can see the red candles coming in aggressively. And what we're looking for would be that low here. Now, you could hold that all the way down here. Now, this is why I don't like tight stops, because this might have been the reaction to the fair value gap on this area here. And it might flash up to the highs here and take the highs of this. Why? Because you have another fair value gap here. And obviously, if you are aiming to go down here, where's your stops going to be from this move? Or potentially my stops might have been above this area here. So the price might come up, tap this area, and then come down. So you might be right and say, look, this is a valid entry. We broke the structure here. It came back down into the fair value gap, but now it's pushing higher. And I'm stopped out because I've only got, let's say you do your 3 pips. Look at that, 4 pips, and you're at that area there. So that's why I don't like tight stops, because I don't want to worry about this. Yes, your risk reward, if you're risking 10 pips and you're making 10, is huge. But why be? I can't do it. I can't do it. I know ICT does it, and he has so many tools that he uses, order blocks, and so many things that he uses into his trading. But I am not ICT. I can't do that. So I need some freedom. I need to be able to. If this was my first trade, I need to be able to, the price to come up here to take these highs out and still be comfortable, not stressed. And that's something that it comes with experience, and that's where my repositioning has been developed to see. We're going to leave those lines in there so we can see live how the price is going to react, and we can discuss that as it's happening. So let's pretend we got in here. That will be a nice example. So we're now sitting in 3 pips, $30 in heat. Let's see if it breaks this high, and which is this fair value gap here, from there to there. So let's see if it comes into this area. Let's draw that in a different color so we don't mix it with all our other boxes that we've got in here. It's going to get a bit messy, but it's quite, let's go with it. We're doing something new today, a bit more live, looking at tape. As you can see, it comes down. Where does it stop? This fair value here. So it's coming back up, and people will say like, oh, it stops exactly on my entry. How is that possible? It's because it's the beginning of that block. You got this order here, so it's come back, tapped that order block, and now potentially either going to come to the hum here, or we're going to become confirmed, and our plan to reach these lows here comes to play. So you might be saying like, this is looking good. Why are you not trading this? Why are you not making more money? Because it looks good now, and this might work, but this can easily go back and retest the highs of this. When I've made $1,000, why be greedy? Why go for 1,000 when I can stop trading, do these videos, and do other things in my life? And that's a really key thing with trading. You have to know what you're targeting. If it goes a little bit higher, good stuff. If you're in it for too long and you've been paid $300, $400, look at your hours of work. Do you want to be spending 6-7 hours for the same amount of money that you can make in 1-2 hours? And that's it. Just get paid, get out, and that's it. Now, look at this green coming up, right? Someone will see this and they're saying, oh, it's changing, it's going higher. It hasn't broken this high here. And yes, it rejected the low here, where we said is the sell side liquidity. So let's change that to sell side liquidity. Okay, so as we can see, we've put in the sell side liquidity. This is nicely, we can see that it's playing in terms of the analysis that we did. Yes, we had to sit in about 3 pips. Now it's slowly building momentum on the downside and potentially coming to hit this area here. If this doesn't happen, do we get stressed? No, because we have a plan. We are analyzing this. We're going to see why we are biased short. We broke the previous daily high. This is the beginning of the London session. It came all the way up here, but the most important fair value gap that gave us an entry came from higher up. And we're going to see that if we go on to, if we come up higher and we look at the hour, we can see that the price obviously broke up in the beginning of the London session, but you can see a fair value gap that was drawn here. Why? Because we have the previous daily high that got taken out. So that's one indication that we're at extreme. This move has been pushing up and higher and higher and higher. So there's going to be inevitably a retracement at some point. Is there an area where it potentially can give us another indication that the price might not be reacting to. And we can go further out, and we can go to the I think it was the 4 hour. And on the 4 hour, what we can see is this here obviously taking out the liquidity, but on the top here we can see a fair value gap at that area here. Now let's see how close that is to what's happening now. If we zoom in and take away the sessions, the price is starting to react around that area. And now you can see the price is becoming red and red, and that live trade that we're looking at is coming into play as we speak. Like we discussed, that entry on the fair value gap now is looking quite nice. We're already moving into 5 pips, getting close to 5 pips, and that target of these lows is looking quite nice. So let's go back to our trade. So that fair value gap here is from the 4 hour, and that's the entry that we got in. Okay, so we had a broke of structure, and then it came down, and it gave me a confirmation that this was a switch of character. Like we said, I was already interested of getting in at this area, and this is the area that I did get in the end, and the 50% of that fair value gap. But I would like to see the previous daily high getting broken, and that happened. Now you might ask, why did you not get in here? Because I wanted to see to come back down below this fair value gap and then get in. And I saw this, it broke this order block here, it had a reaction on it, and then pushed down. Below this, I want to be involved. Now, if you are doing a strict ICT entry, you would have to wait for the price to come back up and get in here. As you can see, I had another best entry, and that was after this trade. So this trade here paid me all the way down here, and I made $300. Super clean. So that was 20 pips, and I had I think I got 30 pips on that, so $300. It's because I had 2 positions in there. And then the price came back up, and I was monitoring this, I believe, on the 5 minutes. So that original entry came in, and then we had a fair value gap that we wanted to fill. And that fair value gap was here. One here, and that small one here. Now the price came back here, and I was tempted to enter, but there's so many times that it just does a small wick. You see here, it touched this fair value gap, and then pushed higher, and then came back down, refilled, came back down, and filled the whole fair value gap. So when it came back up, I wanted to be involved in this area. Soon as it broke this high here, the intermediate high if you want, I was involved, and I got in there, and I traded it down for another, I got paid $500, so it would have been another 220 pips, which is pretty much the whole move of that down to there. And we made our 500 profits. Now let's look at this live thing here. So you can see this is coming down nicely. You might be seeing this as a green candle, but it's actually the momentum is potentially coming to take this out. We even now, let's see what we made on this entry, the hypothetical entry, 4.6 pips. That would have been done anything to me. Obviously, I'm waiting for 20 pips. And I'm just giving you an example on how I would do it live. Now, where do I start thinking of repositioning? For me, is there an area of fair value gaps that hasn't been tapped into? And now it's a bit messy here. But the yellow fair value gap that we looked at, let's take some of these boxes out so it becomes a bit more clear. Now you know how I made my money. Let's look a little bit of exciting stuff, a bit live stuff. That's my previous trade. Now, my second interesting area around this would be around this fair value gap that we monitored here. I would want the price to come here, see it breaking this high, and then coming down to take out this position here. Now, if I think that is a bit too close, so the price might come all the way up here or even up here before it retraces, I might want to wait. And this is where my experience comes in. Are we going towards this liquidity grab here, or are we going higher? And that was the end of the move down. That's where you need to see a lot of tape. And I'm not going to give you those answers because I don't want anyone to see this video, even though I think it's going to be after, and take trades out of what I'm calling it. I'm just doing this for educational and a bit of fun. So as you can see, like we said, equal lows, came back up, filled fair value gap, pushed down, came back up, failed to break this high. So this is looking good for our delivery to this area here. Where would I want to target? So I can take partials at this here, 8 pips. So that would be $80 for me. You might want to be taking $40 out of that and holding it for the whole move to these lows here, which would be 12 pips. Now, if you had 2 positions on this, that would be 20 pips, obviously. And then where would be the big target? What are we looking for? Big target. That's why we need to go a little bit higher time frame. And we can see that's the sell side. Now, where can we target? We can target below this swing, and what do we have here? We have fair value gaps 1, 2, 3. This has got covered, so this is pretty much done. This one, and at the bottom here, equilibrium. So if the price is going to be bearish, equilibrium will be our next long target. Can this be done in this session or the New York session? Absolutely, it's 40 pips. What do we also have? News at 12 o'clock. So that can easily deliver that with news. But news obviously can go both ways. I don't analyze the news. I don't try and predict the move on the news. If my move was to go to equilibrium and I'm still stuck in news, I would just make sure that my exposure is not too big if the price wants to come higher. If it comes higher, yes, we don't want to predict the news, but we can predict potentially where the price can scream up to. What do we have here? This swing high here. So let's drag a line across all the way. So what we're looking for is to see if there's good news and this screams up, next possible target is here, 88 pips. Now, if I have one lot size, that would be $800. If I had 2 lot size, that would be 1,600. So how many lots can I have to take a move against me of that magnitude? That's what I'm thinking before the news. Do I need to decrease my lot sizes? Do I need to take 1 lot out? If I take 1 lot out, my risk now to this high is $800. Now, if there's, I don't know, if there's a huge sworn event or news, potentially might come and take liquidity above here. So my worst case scenario, the price from there is to come $142. Now we're talking about extreme events that moves directional within minutes to 100. That's something that you would see on the US 30. That's why I don't trade it. But I know that this is going to be possibly, I think our trade has actually happened. Let's see. Look at that delivery. Boom. We broke that live. Fair value gap filled, delivery within this video. That's how strong ICT concept is. Now, next target down here. When it takes this here, but it's doing it now, it takes this side, sell side liquidity, then it potentially can go up. And that's what we need to be careful about this trade here. Because why? Because we've got this order block here, if you want. We've got a fair value gap there. If we drag that across, it's aligned, that fair value gap, with the sell side liquidity. So for this to confirm that as a bearish move, we would want to see a strong move down, a strong break. If it comes and taps this area here, I'll be thinking, right, I need to make sure that I'm not exposed on the way up of this move. And as you can see, came back, delivered that. Now algorithms are taking in. Where are we going? Are we going here, or are we retracing up? Where? To these fair value gaps, the areas of here. And that's how you start trading. And you see this so much that you're getting good at this, of like analyzing where is the next draw to liquidity, where is the next target, and it comes with practice. Okay, folks, there you have it. A bit different today, a bit of live trading, also discussing what we did on the 500. I know people are asking me, come on, dude, get on live. Let's see you trade live. I have expressed why, and other people have said, why don't you do like I did today? Trade live, record it, and then give you the video of how I traded it. I don't want that pressure. I don't want extra pressure of, knowing that I'm potentially, if I don't share the video, or if I do share the video, how that is going to come across. I don't want that. I'm obviously sharing what I want, and what I want is to give you these types of videos. I hope it's helping. If it's not, unfortunately, you have to go somewhere else and find those live trades. Maybe one day I feel ready and I want to do some live trades, but for now, I am happy with the stress that I get in terms of managing my day around my son and going and enjoying the sunsets and so on. So I'm quite happy with that, and I hope you get value from these. And let's keep it there. Let's keep that discussion there. If one day I provide more, let's all be happy that I've provided more because I found some time. But I think you're getting enough value here that you can go and test these things for yourself. And I am going to switch back to the charts, because look at that. Sell side taken out. Let's stay here for a few minutes, because I want to see, like we discussed, if this is bearish, we want to see a heavy candle coming down. We've tapped into this fair value gap here. We've actually closed the fair value gap. So it's either going to pin up, do a wick like this to the upper side, or we're going to see a heavy candle. If we see a heavy candle, this is where it can get interesting, because that bigger target that we're looking for, equilibrium, is quite enticing. And can it do it? What time are we on? Let's see. In the UK, we're 10 o'clock. We've got 2 hours till the news. So could the algorithm, or the price action that we're seeing, going back to equilibrium before the news? Just a guess. Could that happen? And I'm not going to stay to see this out because the video is going to be enormous. But as you can see, this is a heavy candle. Obviously, don't take any decisions of what I'm saying live. But who knows? These two deliveries, it did it within how long this video has been up. And now we're seeing a little bit of a green candle, and that will give us indications of what's going to happen next. And that's how we read tape. Let's go back on this. Make sure you subscribe to this channel. I know that 50% of the viewers, that's a lot. I get average about 1,000, 2,000 views. That's 1,000 people are not subscribed to the channel. Why? Subscribe. If you enjoy the content, make sure you subscribe so we can build it and give this information to more people. And maybe one day we have enough people that we build a bit of a community. Who knows? And there you have it. Make sure you track that information that we were looking at out of interest to see where that price is going to go. And make sure you don't trade of any of this information. Again, I'm going to call it a few times so you don't take any losses or profits from my sayings. We're only doing this to get better and more consistent. That's why we're always looking at previous moves that have happened. There we go. I hope you've enjoyed it, and I'll see you tomorrow for the last day of the week. It's Friday, and be careful with that Bank of England around 12 o'clock UK time. Have a good one.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah.